I'm a big proof of work guy. Proof of stake has it. To me, it's too close to the old system. He who has the gold makes the rules. I like proof of work, right? You have to do the work. And so I own a couple NFTs and, dubious value. What is value? It's in the eye of the beholder, but they're worth something, thousands of dollars, whatever. Yeah. I don't want them on a chain that points to an AWS server. Mm-hmm. That's not on chain. That's kind of on chain.
Totally.
I want it on chain. Like my PFP is on the Bitcoin blockchain. Now there are those who say, well, that's polluting the chain. I'm like, why? I mean, it's there. It's not causing any stress.
Hey guys, welcome to Everyday Finance. Despite the fact that Mark Yusko investigates the intersection of Bitcoin, artificial intelligence, and the beginning of a powerful 14-year tech supercycle, the market itself is displaying a very different kind of mood: silence. An unsettling pause has been created as a result of the sudden cessation of accumulation by Bitcoin whales, the fact that long-term holders are not selling much, and the fact that Bitcoin has fallen below key levels. The most revealing indication comes from Dolphin wallets, 100 to 1,000 BTC, whose aggressive buying has decreased from a peak of 965,000 BTC to 694,000 BTC from its previous level. The combined market cap of corporate treasuries that are filled with Bitcoin has witnessed a significant decline, going from $152 billion to $73.5 billion. Bitcoin is currently trading below $89,800, and traders are focusing their attention on the $86,500 support level. They are attempting to determine whether this calm is a reset or the beginning of a more significant pullback.
I'm a long-term, wildly bullish believer in Bitcoin. And to me, Bitcoin has won as the money for the next 5,000 years. So gold was money for the last 5,000. Bitcoin's money for the next 5,000. It's the transition from analog to digital. Look, money is an asset that exists in the absence of a liability. Gold has been that. I mean, we had puka shells and stone wheels, but gold has been that for 5,000 years. Now we have a digital version, which is more divisible and more portable. Same scarcity. So I think it does that. And so therefore, what does that mean? Well, that means that a single ounce of gold has been a single ounce of gold for 5,000 years. But the value of that gold has changed from single pennies to, $40-something $100. The gold didn't change. The monetary unit changed. And the problem with currencies, there have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. The oldest today that's still surviving is the pound sterling. And for a pound note, you used to get a pound of sterling silver. Today, it would take you 174 pounds to get a pound note. So it's just not, it's not the same. And the pound note didn't change. It's just a piece of paper, a piece of linen. Someone posted a picture the other day, like $50 bill and $100 bill. What is the difference between these two? Belief and custom, right? You believe one is worth 50 units of effort and one is worth 100 units of effort. That's just a belief and custom. And so the problem with fiat is all fiat eventually goes to its intrinsic value, which is zero. All currencies have intrinsic value, zero. Money has intrinsic value. Gold has intrinsic value. Bitcoin has intrinsic value. But it's belief and custom. So that's one thing that I'm eternally optimistic, but it's not going to go up as fast because we're not going to devalue the currency as fast as we did the last 5 years. The last 5 years, we printed more currency in the United States than the previous 245 years. That's just not going to happen again. I mean, we'll print more, but we're not going to Weimar it, I don't think. So that's one. I want to like the whole smart contract universe, because I do believe that that there's a role for a world computer, right?
Yep.
I do believe there is a role. Now, a couple things on this. So one, it's funny. I love to go on, spaces and podcasts and stuff. And it's funny. If I go on a Bitcoin maxi show, they're like, "Oh, you're a shit coiner." I'm like, what are you talking about? I own a lot of Bitcoin. Not. And they're like, "No, but you own Ethereum. You own Solana." I'm like, "Yeah. And your point is what?" And if I go on a Solana show, they're like, "Oh, you're a Bitcoin maxi." I'm like, I own a lot of Solana. Like, I made more on Solana than any investment in my whole life.
Wow.
Not credit to me, credit to Kyle Samani and his team.
Kyle loves.
But, still, I get to spend the money now. Best investment ever in my career. I mean,
wow.
So grateful. And that's just the law of small numbers. You put a small amount in that turned into a big number. But the point is that I'm torn because there are those that don't want to believe in one or the other. I'm like, but they're not mutually exclusive. They're different. Now,
I agree.
I also struggle. Like, I'm a believer in runes, and the guys will love me. I'll say dog. I like dog go to the moon. And I'm like, how could you like that's just a meme coin? I'm like, yeah, but it's a meme coin on the right chain. And what do I mean by that? I'm a big proof of work guy. Proof of stake has it. To me, it's too close to the old system. He who has the gold makes the rules. I like proof of work, right? You have to do the work. And so I own a couple NFTs and, dubious value. What is value? It's in the eye of the beholder, but they're worth something, thousands of dollars, whatever. Yeah. I don't want them on a chain that points to an AWS server. Mm-hmm. That's not on chain. That's kind of on chain.
Totally.
I want it on chain. Like my PFP is on the Bitcoin blockchain. Now there are those who say, well, that's polluting the chain. I'm like, why? I mean, it's there. It's not causing any stress.
Businesses that hold Bitcoin are entering what Galaxy Research refers to as a true Darwinian phase, which is characterized by the fact that only companies with robust balance sheets and a disciplined strategy will be able to survive. The model of digital asset treasury, which was once profitable, is falling apart as equity premiums continue to fall and leverage, which was the fuel that powered enormous growth, has turned into a brutal liability. The October decline, which occurred from $66,000 to $80,000, resulted in a significant loss of liquidity and a wipeout of open interest. Financial engineering is currently bringing down businesses that were once able to achieve great success through its use. As premiums are being converted into discounts, even businesses that are sitting on large Bitcoin stacks are in the red. Heavyweights such as Metaplanets and Nakamoto, which were once riding big gains that were not realized, are now trading below water as their average entry prices hover over $17,000. The more than 98% collapse of Naka is comparable to a wipeout similar to that of meme coin.
And the thing about it is, the idea of it is so logical, right? If you think about it, if everything's going to be digital, every stock, every bond, every currency, every commodity, every piece of fine art, every building, every private business, if ownership, not the physical thing, but if the ownership and the digital identity, like my driver's license, my marriage license, my passport, if all of that's going to be digital, I kind of like the idea that it's on a chain that can't be seized, can't be corrupted, can't be hacked, can't be turned off. Like, I got in this debate with the Solana guys. And Solana's been very
You're definitely a Bitcoin maxi, by the way.
Kidding. And it's funny because I got in a thing because I said my problem right now with Solana is transactions get vaporized. And oh my God, how can you say that? That is not what happens. We've never rolled back the chain. I didn't say you roll back the chain. I said more often than I like, I put a transaction out there, the network's down, and unless I see it and resend it, it vaporizes. It's not like the end of the world, but it's less than good. And so until you fix that, I struggle. And then, you got all the other things about, well, what about the wash trading and the real volumes? Like, whatever. But we know that it's faster and cheaper. Yeah. And, and again, I make the Ethereum people really pissed on this. I asked the question, well, if Ethereum was invented today instead of first, would anybody use it? It's a legitimate question, right?
Yeah, it's legitimate.
It's slower and more expensive. So if you had the choice, now, could you say, well, it's more secure, so I'm willing to give up speed? Yes, right? Good, fast, cheap. Pick two, like when you're building a house. You can get it good and fast and it won't be cheap, good and cheap and it won't be fast. So there are trade-offs in all of this, but it's because the technology is evolving.
Yeah.
And at the end of the day, I am a technology maximalist.
Yeah.
I love technology. I love working with innovators. I mean, I was on the phone yesterday with this guy in Hong Kong. He's working on a project with Animoca. And I'm trying to keep up. I mean, I really am, but I'm not an engineer. I'm an old finance guy trying to, keep up. But man, he was going deep into the tech. And I say it all the time. Like, I don't understand how you and I can be talking in real time in HD, and I'm staring into a metal and glass box. That just doesn't make any sense to me. And I don't really understand the difference between CDMA and TDMA, but I don't really care. And so I just know that there are people like this guy I was talking to yesterday who do know all the differences between sharding and this and that. And that makes me comfortable. And so I just want to partner with those people. We talked to this guy the other day. He basically invented everything that you do on your iPhone related to the App Store. He coded by hand, like him personally. And then he invented the chip that AMD is now competing with NVIDIA. The current CEO is taking all the credit, but he's like, I built that. Mm-hmm. You can pull up the notes, and I built it. And he's got this new company, and I could talk to this guy all damn day. I mean, now part of it, he's been around a long time. He's done a lot of things, and he speaks my language, old guy talk. But then on the flip side, we talked to this kid. My wife says, you can't call him a kid. That's disrespectful. Like, he's 30 years old. I mean, he's younger than my kids. And so I love this. So he said, he went to Duke, that other school down the road. I call it University of New Jersey at Durham.
Never heard of it.
I know, never heard of it. UNJD, as I like to refer to it. And because 80% of the class is from New York and New Jersey, but it's not 80, but it's pretty high. So he was in the lab and he's like, why does my phone always get hot? It's because the memory's over here and the processor's over here and the electrons go back and forth and the wires get hot. He says, what if we use photons? And the guy says, can't do that. Photons won't go in silicon. It's like, well, it'll go through liquid crystal, right? We said, what if we put the liquid crystal on the silicon? Like, can't do that. So he goes to the lab and he does it. And I'm like, okay. And then even better, I love telling the story. One of the best investments that we ever did was the result of what I call the triple play. So to get the best returns in venture, you need three things. You need a technology cycle. So that 54, 68, 82, 96, 2010, 2024. You need low levels of money chasing deals. So if there's too much money chasing deals, they'll pay too much, so your returns go down. And you need a bunch of laid off workers from a recession. And the last time we had all three up until this year was 96. So in 96, we had this guy, he just got laid off by Bell Labs. And he says to the guys, hey, can I take my project with me? And they're like, dude, we don't know what dense wave multiplexing is. Knock yourself out. And he goes all over Silicon Valley. No one will fund him. And the best part of the story, the only person that would give him money is his retired third grade school teacher, who gave him her life savings of $300,000, which was not a good decision. I'm not saying that was a good decision, but she trusted him. And so finally one venture fund gives him some money. Well, they said, what is it? Well, fiber optic cable, white light, X data. If I shine it through a prism, I get 8 colors. I get 8 times as much data. 16 colors, 6 times. And they're like, no way. Does it, works perfectly, comes, now I'm forgetting the name of the company, but it worked and became a multi-billionaire. And her 300K turned into 300 million. I love that part.
Love it.
So love it. But I can't believe I can't remember the name of the company, but it doesn't matter. So, but he was laid off, right? Nobody was doing the deals. All the venture guys were out of money. And we had the technology cycle around the internet. So we needed to expand the capacity of fiber optic cables. So if you look at today, what do we need? We need to expand the capacity of doing analysis, AI inference.
Yeah.
So this guy says, well, I could take the laser and shine it through a prism, and CPUs work in 2 dimensions. They read words. GPUs process images and read words, but they can go faster, right? Pictures worth 1,000 words, but they're still linear and sequential, and they're 2-dimensional. But he's like, matrix math, which is what inference is about, the way the brain works. Brain doesn't work in 2 dimensions. It works in 3 dimensions. He's like, I'm going to paint the matrix on the crystal and paint it on this side, and then I'll have a 3-dimensional inference tool. And they're like, no way. It works. Just got funding from Bill Gates and Microsoft. And, we're following on. And
That's great.
I mean, now maybe it doesn't work and maybe it's but if it does what we think it's going to do, it changes everything, because
100%.
not having heat in your machines means no more cooling, no more, restrictions on space. You can have all your models locally on your laptop. Be awesome.
A long and painful period of compressed premiums, consolidation through mergers or restructurings, or eventual revival if Bitcoin reaches new highs again, a scenario that will reward only the firms that remain disciplined and survive the downturn, are the only 3 options available to Bitcoin treasury companies now that issuance opportunities have been eliminated. While Yusko is discussing the impending wave of technological acceleration, which will include everything from artificial intelligence to Bitcoin and beyond, the market is simultaneously positioning itself for a moment that could either make it or break it. The manner in which Bitcoin reacts to the subsequent liquidity shift will determine whether this placid phase will serve as a foundation for the subsequent leg up or as a warning signal.